All right, everyone, here we are with ticker symbol Nndm, Nano Dimensions. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back. And before we jump into this chart, I do want to announce there's going to be a trivia question. It's going to be very important to keep in mind. So I look forward for you guys staying tuned to answer that question towards the end of the video. It will be one of the cues to keep a close eye on. Mostly, probably, or most likely, the most important, I said mostly 3 times and mostly 1 time, excuse me for that, but it's going to be one of the most important cues for the next coming days and important for this chart. So yesterday we spoke about one, and we're going to see which one is another important one for the next coming days and weeks. So let's go ahead and pay close attention to this and stay tuned till the end, because I will be asking that question. Let's jump into this chart. So Nano Dimensions broke through support. It broke through the 50-day moving average, and the 50-day moving average is 299. Super important to keep that in mind, because that lets us know on what side of the chart we're in, and we're in bearish territory since we're below it, and when you're above it, you're in bullish territory. So right now, the bears are slightly dominating this one, but it's still a little bit above halfway after it leveled off at 294 from this bullish run and continuing the run. So it hasn't completely fallen to the lows that we recently saw, which was down here at 268, 267, and that point down there was super important to keep in mind. But right now it's leveled off, and the bulls are trying to put a fight to stop this from falling to newer lows. So let's move our support and resistance to its new location, and I want us to pay close attention to these numbers based off of what the chart is showing us. So one of the highest points reached in this bullish run was 318, and that's one of the most important numbers for the bulls not to recover. They're going to recover based off of the 50-day moving average and the resistance level that we're about to talk about. But up here at 318, it is super important, because that's the point that the bulls want to break through to start hitting newer highs and reach newer levels of resistance. So that is one of the most important points for the bulls. 318, they want to break through that so they can reach new resistance levels and newer highs. Let's look at our new support and resistance based off of what the chart is showing us, and we're going to see here what's important. So we're at 294. The 50-day moving average is 299. The bulls want to break through that and get back into bullish territory, but to signify that they've gained control and leverage, they don't want to just break through the 50-day moving average. They need to break through the first resistance level, which is 305. They need to turn that into a support, pull away from it to reach new highs and new resistance levels. Super important for the bulls to do that so they can pull away from the 50-day moving average in an upward direction. So the bulls don't just want to get back into bullish territory, but they want to gain leverage and confirmation that they are in bullish territory by breaking away from this first resistance level. It's the highest point when this leveled off before it broke through the 50-day moving average, and that's 305. They need to turn that into a support and reach new highs and new resistance levels. On the other hand, we have our support. If this support is broken through, the bulls are losing leverage more than they already have, because the bears are already gaining control by having this below the 50-day moving average in bearish territory. So I want to go ahead and emphasize, since this is the lowest point reached in this bearish run and even lower than the previous lows that we saw here, and the lowest point was down here at 286. This is literally 1 cent away from that. If it breaks through this support, we will start to see this hit newer lows, new support levels, and pull further away from the 50-day moving average in a downward direction. So it's super important to keep that in mind. If 287 is broken through, pay very close attention to the behavior of this stock, signifying that we're getting deeper into bearish territory, pulling further away from the 50-day moving average, and we're already in bearish territory as it is. As always, I hope that these cues are helpful and informative for tomorrow's trading day. If you found this video helpful and informative, and you're encouraged or inclined to subscribe, please do so. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community, and don't forget to hit that like button to let me know you watched this video. So, trivia question. The trivia question for today is, What is the highest point that this stock reached since this bullish run from hitting these lows down here when it was very bearish and coming back up? What is the highest point reached in this area? And the second question is, why is it significant and important? I look forward to seeing your guys' answers down below. And as always, thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up, also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.